Today we took this USDJPY pair, and somebody again asked why we took the sell. And like I told you earlier, our formula, we use BTMM, but once again, we don't only use the BTM as a strategy. Any trader of BTM knows and is aware, he or she is aware, that with the BTM, we concentrate so much on levels, and most especially in the H1 and the 15 minutes. But entries matter so much. If you don't try so much to work on your entries using any strategy, even though it isn't BTMM, Forex will become so much complex for you. And one of my biggest concentration and determination when it comes to entries, I concentrate so much on patterns. Never ever take a trade without a pattern. What do I mean by pattern? The M and the W, and then the head and shoulders. A trade that we took, you see like a vivid M, and indeed it is. But what will keep you or prompt you from taking any trade is all about the candle closure. First is some kind of a reversal formation at this area. And the key point here will be, whenever you see any candle formation whereby the candles are closing below this red line or the 13 EMA, that's a clue for you to keep watching that trade, especially if price keeps rolling below the 50 EMA. Be beautifully backed up by two things. I told you, when you look at the charts, first of all, first look at the price. Where is the price on the charts? Is it above or below the 50 EMA? Now, for this case, price was above the 50 EMA here earlier on in the night, because we took a buy yesterday, and then we got out at this point around here, around this area. And then there was a structure formation of an M, and with this M formation, it was backed up by a candle closure. The candles closing below the 13. You see what? And for this session as to why we took the trade, you'll see that this candle came, I mean the RSI also crossed at this same point over here. So, but you shouldn't just take a sell blindly. Make sure there is a structure or pattern formation. Now, for this case, there was an M, even though we took a buy yesterday with our RSI giving us a signal to buy. Today, it gave us a signal, and then we took a sell. So, if we go to other bigger time frame, as I told you earlier in one of the videos, that make sure whenever you take a trade, that it is within the direction of the bigger time frames. So for this case, if you look at the RSI, you see closely here, over here, price already crossed on the weekly time frame. And then if we go to the D1, price has been rolling below the 50 level on the RSI. It crossed earlier on last month, and then it has been rolling and running down in a sell. So if we come down to the H4 structure M formation over here, and then that M prompted price to go below the 50 EMA. Whenever there is a 1350 cross, remember, on the, most especially on the bigger time frame, at least you are aware where price is going, but you don't have just follow blindly. You follow with the TDI direction, that is the RSI. Then if you come over here, there was a 200 cross again, and implying that price was locked in. So for our matter, when we went to the H1 and M30, we had to take the sell. Reason being, we are in the downtrend.